A new era of ethical banking. If banks could only invest in socially responsible projects, the financial world would shift dramatically. Investments would prioritize sustainability, fair labor practices, and community development. This could lead to a healthier planet and a more just society, but would it limit economic growth? Would ethical banking be enough to drive innovation while maintaining financial stability? Redefining profitability. Traditional banking prioritizes profit, but a socially responsible model would emphasize positive social and environmental impact. Banks would fund renewable energy, affordable housing, and ethical businesses rather than fossil fuels, weapons manufacturing, or exploitative industries. While this could lead to long-term sustainability, would investors still see attractive returns? Could ethical projects compete with high-revenue industries? The impact on global corporations. Large corporations rely on banks for funding, but many operate in industries with questionable ethics, such as fast fashion and mining. If banks restricted investments to responsible projects, these corporations would need to reform their business models or lose financial support. Would this force companies to adopt fair wages, environmental protections, and better labor conditions, or would it stifle economic competition? Growth of green and socially conscious industries. Socially responsible banking could accelerate the growth of green energy, ethical tech, and fair trade businesses. Startups focusing on sustainability and social good would have greater access to capital. This could lead to advancements in clean energy, responsible AI, and equitable supply chains. However, would these industries scale fast enough to replace the economic powerhouses of today? Consumer trust and banking culture. People often distrust banks due to risky investments and financial crises. A socially responsible banking system could rebuild trust, as consumers would know their money supports ethical initiatives. More people might invest in socially conscious financial products, like green bonds and fair trade funds. Would this shift increase global financial stability, or would some people still seek higher, riskier returns elsewhere? Government regulations and policy changes. Governments might need to create stricter regulations to ensure banks follow ethical guidelines. Policies could define what qualifies as socially responsible, preventing loopholes that allow greenwashing. However, excessive regulation could slow decision-making and make banking less competitive. Would governments effectively balance oversight with economic growth, or would bureaucracy hinder financial progress? Challenges in defining social responsibility. Social responsibility can be subjective. While most agree that clean energy and fair labor practices are ethical, opinions differ on industries like biotechnology or artificial intelligence. Who would decide which projects banks can fund? If ethical banking became the standard, would it limit diverse perspectives in business investments, or would it create a more universally beneficial economy? Economic stability and risk management. Socially responsible investments tend to focus on long-term sustainability rather than short-term profits. While this could reduce financial crises caused by speculative bubbles, it might also slow economic expansion. Would banks find ways to balance ethical responsibility with financial security, or would some investors seek unregulated alternatives, such as cryptocurrencies and private lending? The role of fintech and decentralized finance. Fintech companies and decentralized finance, DeFi, could play a major role in ethical banking. Blockchain-based systems might allow consumers to track exactly where their money is invested. Crowdfunding and peer-to-peer lending could further support socially responsible projects. Would traditional banks adapt to this shift, or would decentralized platforms replace them as leaders in ethical finance? Would a socially responsible banking system work? A world where banks invest only in socially responsible projects could lead to a fairer and more sustainable future. However, challenges such as defining ethical standards, ensuring profitability, and maintaining economic stability would need careful consideration. Would ethical banking create a better society, or would it limit financial freedom and economic diversity?